Can you see my screen?
Yes, yes.
Yes, we can.
Yes, yes, perfect. Okay. I will open the chat and the markups because it's part of the case study building. Where's the chat? Here's the chat. Perfect. Okay. Close my short position in London session because I didn't like the reaction when I closed the price, just fell down to 10 risk for ratio. Yeah, that happens. You have to trust your, you have to trust your own analysis. If you have an analysis, if you have an edge, you just have to trust that edge. And if that edge seems like it's playing out, you just have to trust it no matter what, even if the reaction is slow, even when it's actually ranging inside of your POI. If you have an edge, just keep following that edge. And if your edge shows up, just keep executing your edge. Because if you're not executing your edge and you're impatient and you're trading impatiently, you'll happen in every single trade opportunity. And that is not, that's not the definition of trading your edge. But if you have a plan, if you have an edge and you just only trading the edge, you're only trading that plan, and you're only executing those trades which are part of your edge, which are part of the plan, the pre-session narrative, you'll keep executing your edge. And even though that will hit stop loss, that doesn't really matter because you keep executing your edge. And if you keep executing your edge, and for example, you take a loss, take a win, take a break on, no matter what, you can journal that edge. You can journal that edge. You can actually track the records of that edge. And for example, after 100 trades, you'll be able to actually track the records. You'll be actually able to track the statistics and make statistics out of your trades. But this only works if you're trading your edge. And if you keep executing trades that are not in your edge, not in your plan, you just have false statistics. So it's really, really important to just keep sticking to your edge. Hey, Marcel, what's your win rate? 30%, 50%. My win rate is around 50, 60%, roughly. So roughly 60%. So my win rate is positive because, I'm only taking the high probability setups. And most of my trades hit TP/break even, because I only execute the high probability setups, and I'm opening like 3-5 trades a week, not a day. I'm opening 3 to 5 trades a week. Some of you guys are opening 5 trades a day. That's not a good stat. That's actually a bad plan. You have to only execute the high probability setups. That's why I have a huge win rate, if you can call this huge. 60% is actually huge in smart money concepts, because I only keep executing my edge. Less is more, exactly. Exactly. If you're taking more trades, your win rate will actually be lower. So guys, let's just start this session because it's time. So welcome everyone. It's Marcel here. We will create I don't know how to call this, a case study building session. I show you how I build my case studies. And actually this session will be about how I personally build my case studies and how do I do my after session backtesting. And I hope it will be helpful for you guys to get an inside view on how do I build my case studies. So let's just begin this session. Before I start the case study building sessions alone, I always take a look at my markups. Because if I take a look at my markups, I will know that if my pre-session narrative was good or bad. And if it was bad, so price did completely different thing than I was expecting, then I can actually track it and see why it was bad and what went wrong and why was my analysis bad. So the first step is to take a look at the 4-hour chart and take a look at the markup. Actually, in the 4-hour chart, we won't see anything because it's still ranging, so we can't really decide. So I would just rather take a look at the 15-minute chart. And I copy paste the image, open the 15-minute chart, and copy paste the image here. That's not the image, okay? Just a minute. So here's the image. Copy and paste it here. If I can, why can't I? Why can't I copy and paste the image here? Okay, never mind. So just take a look at this 15-minute markup. What can we see on this 15-minute markup? What did I mark on this 15-minute markup? Let me just open the chat of the Zoom, please. So what can we see here? We can see that I've marked the supply zone up here, that I was expecting a reaction on the supply zone. So that was the first step of our plan. That was the first step of our narrative. I was expecting a higher time frame reaction on this supply zone. So that basically that was the higher time frame narrative that I've built for this session. So let's take a look at this chart. And if you can zoom in, you will see that this was that supply zone that I marked on the markups. And I was expecting a reaction on the supply zone and a reversal. That was the first scenario, as you can see. So the first scenarios happened. So part of my plan was correct, because as you can see, prices perfectly came up to mitigate the supply zone, react on the supply zone. And as I marked it on the 15-minute markup chart, there was a change of character, more likely on the 1-minute chart, because on the 15-minute, you can't really identify a change of character right here. But these markups, these arrows are meant to be on the 1-minute chart. So I'm meaning these markups, meaning these arrow movements for the 1-minute chart. So as you can see, the first part of the plan has worked out perfectly, because the tap of this zone has happened. The tap of this zone has happened. So our narrative was correct. Other part, there were two scenarios. The first scenario was the reaction on this zone. The second scenario was the break of this zone. So we built a narrative for both of these scenarios if the zone is being tapped. So the zone has been tapped, and all we had to do is react on this scenario. And once again, this is only the higher time frame scenario. This is only the higher time frame scenario. We'll have a different scenario. We have a different plan. We have a different narrative on the lower time frames, for example, on the 5-minute and the 1-minute chart. So the higher time frame narrative has played out perfectly, because prices tapped this 15-minute zone, created a change of character right here, and continued the movement to the downside. And as you can see, as I showed you in the markups, I wrote it on the markups. If price will react on this zone, yeah, here it is. If it created a reversal, change of character, then we might see a downside range sweep first. And as you can see, the upside range is still there. Price has created a change of character right here on this 15-minute zone, and the upside range is still there. So the downside range has a higher chance to play out. So price has a high chance to sweep the downside range first, because price couldn't break above the supply zone once again. And that was the third attempt. As I said, as I wrote it here, it will create a third attempt. And it's on the way up to create the third attempt to break the high. So the high is still unbroken. So price has created 3 different attempts to break the highs. As you can see, here was the first. It couldn't take the high out after sweeping the liquidity. Let me just zoom out. After sweeping the liquidity here to the downside, slapped the liquidity into this demand zone, created more liquidity below this demand zone. And this movement after the liquidity sweeping movement, this upside movement couldn't take the high out right here. So that was the first attempt. Second attempt, prices reacted on this inefficient creating demand zone right here. There was a reaction, there was a change of character once again, but this second attempt couldn't take the high out once again. So 2 signs for the weakness of the bull run. As you can see, then price created this another demand zone right here that I mentioned in the markups. And after reacting on this demand zone, it couldn't take the high out once again. So that was the last recent high point. And this low point couldn't take that high out once again. So what can we expect in this scenario? 2 scenarios we can expect. The first scenario is that price will continue the downside movement and react on supply zones over and over again, react on demand zones over again, react on supply, react on demand, react on supply, and it will take the downside liquidity out. That's the first scenario. The second scenario, which has a lower probability to pay out, is that price will create an upside movement here, take out some liquidity from this region, come back to some demand zone and take out the upside liquidity first. But there are signs for the weakness of the bull run, because price failed to break above the high points for several times, as you can see. So the first narrative was correct. Actually, on the markups, let me just switch to the markups. On the markups, I'm always showing you the higher probability setup first. So this setup, this character changing setup, was higher probability than the breaking of the zone. So I was expecting this scenario to play out because it had a higher probability to play out. Okay, let's take a look at the 5-minute chart markup. Where is it? Here's the 5-minute chart markup. Let me just switch to the 5-minute chart. And let's see how it played out. So on the 5-minute chart, as you can see, I marked that we can expect 3 different scenarios. The first scenario I was expecting was the reaction on this demand zone, on this first demand zone, this first 5-minute demand zone, because prices reacted on it highly, as you can see. And I was expecting firstly the scenario that price will tap the supply zone, the second supply zone up here. As you can see, this scenario didn't play out because prices broke below this demand zone. There was this demand zone, prices broke below this demand zone. So when the first scenario fails to play out, then you have to adapt and play for the second scenario. That's why we are creating a narrative for every single scenario, because the first scenario has failed to play out. As you can see, this scenario didn't happen. What can you do after this? You can aim for the second scenario. There will be the second scenario, which you can aim for. As you can see, the second scenario was the tap of this demand zone, the second decisional demand zone, which is right here. So the scenario shows that I was expecting a reaction on this demand zone and a change of character inside of this zone. So this is the second narrative. And if this happens, I will take it regardless. If this scenario happens, I will take it no matter what, because that's my second plan. And if the plan happens, which I was expecting at the beginning of the session, before the session, and if the plan plays out inside of this session, then I will take it, because that was my plan. That was my narrative. That's why I'm building these narratives, because I'm expecting these movements to happen. If the first movement can't happen, then the second will happen. If the second can't happen, then the third will happen. And if none of them happens, I will send you a markup update. I will update you in the markup updates, because that's how we do it. So the second scenario, as you can see, was the price will react on this demand zone. And once again, these arrows are the 1 minute chart arrows. So I was expecting these kind of scenarios on the 1 minute chart. Even though this is the 5 minute markup, I'm showing you the 1 minute scenarios, because that's where we trade. We are executing trades on the 1 minute chart. So as you can see, the second scenario played out because price stepped this zone. There was the second decisional zone. Second scenario was if price comes down, mitigates the zone, creates a change of character inside of this zone, continuation up to the supply zone. As you can see, that was the second plan, which has been worked out perfectly. Of course, I did not draw the continuation to the downside arrow here, because that has been shown on the 15-minute chart. So you just have to put the pieces together. It's literally in front of you. You just have to put the pieces together, because I showed you what we can expect when price taps this zone, right? I showed you what we can expect when price taps this four number zone. And I won't show it here again, because I've already shown you on the 15-minute chart markup. So you just have to put the pieces together. These 5-minute markups are meant to be on the 5-minute chart. So we are expecting these movements on the lower time frame. And if the lower time frame movements happen to be play out, then we can switch to the 15-minute chart and take a look at what was the expectations, what were the expectations on the 15-minute chart, right? So if this 5-minute movement plays out, for example, the second scenario, if price comes down to this zone, creates a change of character right here, and the 15-minute zone is being tapped, then after the 15-minute zone tap, we can switch to the 15-minute markup again. We can take a look at the markups, because that's why I'm sending these markups, to actually use these markups in sessions too, not just at the beginning of the sessions, in sessions too. So please guys, just use these markups in sessions too, because these are directional markups. So these are really, really important. These are the expectation order for movements, what we can expect from price. And let me just close this one, sorry. Yeah. So 5-minute scenario, second scenario is played out, as you can see, because price has tapped this zone. And after tapping this zone, there was a 1-minute change of character right here. And there was a 1-minute demand zone that we could play out, and we could target this 15-minute zone. That was the plan. That was the second scenario plan. And that has worked out perfectly, as you can see. So we were following our plan. So as I said at the beginning of this session, if our plan plays out, then it's perfect. Then we have a case study to build. If our plan doesn't work out, so none of these movements are being played out, or none of these movements are being played out, then we can just create a case study about why didn't those movements have played out. So we can just simply create a narrative, and we can just simply learn from our mistakes, and we can just simply analyze the price action, that why didn't it create that kind of movement that we were expecting. And if it creates something completely different than we were expecting, then we can actually learn from it. Why can we learn from it? Because that will show us a new perspective, that will show us what did we miss. Because everything is on the chart, everything has a footprint. All of these are the footprints of price. So everything is readable in front of you. If something completely different happens, you can read that, and you can actually take notes. You can take a book, or you can just simply open a Word file, a Notion page, anything, and you can journal those mistakes, and you can write it down, that why didn't price follow my expectational movement. And if you write those expectational movement downs, if you write those expectational movements down and you journal your mistakes, then you'll notice a pattern in your mistakes. So for example, you were expecting a reaction on this dimension, and the reaction did not happen, and price just broke below this dimension. Then you'll be able to notice a pattern that, for example, there was a liquidity inside of your dimension, and that was the mistake that you made by marking up the charts, by marking up the expectation movements. And if you journal these mistakes, if you keep repeatedly journaling these mistakes, then you'll notice a pattern, as I said. So for example, out of 10 mistakes, 8 will be the liquidity. So out of 10 mistakes, 8 will be that you didn't see the liquidity. And if you journal these, you'll be able to better your performance. You'll be able to be better because you'll pay more attention to liquidity in the future. But if you don't journal your trades, if you don't journal your mistakes, you won't know what your mistakes are, right? Is it understandable yet? Let me just throw it here. Understandable yet? Can you follow me? Or am I speaking too fast? Wait. Am I speaking too fast? Okay. A bit. Okay, I will try to slow down, but you know, my brain is working on the highest and I can't slow down my speech. Let me just read the chat. Yes, very good. Yes, no, it's okay. No, okay, perfect. So that's why you have to keep journaling your mistakes. And that's, ladies and gentlemen, that's why you have to build a narrative before every single session. So once again, please just build a freaking narrative before every single session. Because if you have a narrative, then you can follow that narrative. And if you don't have a narrative, you have no fucking clue what will happen in the market. You will trade without a plan. That's why you have to create a plan before every single session to have a plan. Because with a plan, you won't be lost. Without a plan, you'll be fucking lost in the markets and you'll be trading every single change of character in the market that you're seeing. And you just text me after that, hey, Flip, I saw a change of character. I opened the trade and it didn't work out. What can I do? You can build a narrative and you can compare your narrative with your mistakes. And if you're trading against your own fucking narrative, then that will be the mistake. And by the time you'll actually recognize that, oh my God, I'm trading against my narrative. What am I doing? Why am I keep doing this? I have to trade with my narrative. I have to keep with my expectational order flow. And yeah, that's really, really important to actually track your mistakes. And sorry for saying this for the 100th fucking time, but this is important. That's why it's so fucking important to track your mistakes, to build a narrative before every single session, because without a narrative, you'll be lost in the markets and you'll text me after a session that, why did I lose this trade? That's because you didn't follow your narrative. You didn't follow your plan. And before you text me, please just do yourself a favor and backtest your mistake. Before you text me, before you send your trade into losing trades, take a minute and take a look at your chart, take a look at your trade, take a look at your mistake, and keep finding that mistake. Keep finding what could be the mistake that went against my trade. What could be the actual bad position in this trade? What could be the bad criteria in this trade that I didn't consider? What could be the bad point of this trade? And keep tracking these mistakes. Because if you ask for help from somebody else, for example, from me or from other group members in the losing trades, you won't learn. But if you backtest your own mistake, if you backtest your own analysis and compare your analysis to the actual movement, to the actual happened movement on the chart, then you'll be able to notice what was your mistake. You'll see that, okay, I didn't consider liquidity here. Okay, it wasn't a strong change of character. Okay, I was trading against the trend, because after a session, there will be everything on your chart. As you can see, everything was on my chart. For example, if I wanted to go long right here and I've opened the long position right here, I know that I was trading against the order flow because I will see that the order flow is bearish and it's keep following the bearish pattern. And I know that this trade right here, for example, the long trade right here, not with a break, for a long trade right here was against the order flow. And that was my mistake. And that's how you can actually track your mistakes and get better time by time, get better loss by loss, because losses are really, really important part of the game. If you don't take losses, if you just keep winning, which is impossible, of course, but if you don't take losses and you don't accept losses, which you have to, then you won't see progress. You have to accept your losses. You have to accept that you're taking losses, and that will be completely fine. Taking losses is completely fine. Not finding the mistake in your losses is not fine. Not finding your mistake in your losses is bad. And if you're not finding your mistake in your losses, then you won't see progress. You'll see progress by backtesting. You'll see progress by backtesting your losing trades. So guys, I'm not saying that you have to take losses, that you should take losses, and tomorrow just open some random trade and take a loss, because that's not part of the game. Taking losses that is good according to your edge, that is good according to your plan, is a part of the game. So taking a loss, which is completely fine and agreed by your edge, by your plan, is completely fine. It's part of the game. But if you don't backtest that mistake, if you don't backtest that loss, then you'll be fucked up and you'll get lost and you'll get burned out and you'll stop trading because you keep repeatedly losing. So yeah, that's why it is really, really important to backtest your mistakes. Are you actually enjoying these psychological talks, or should I just shut up and talk about the case study?
No, we are enjoying very much.
Thank you, man. Thank you. Yeah.
Useful, really, really good. Thank you.
Okay, perfect. Because if you're tired of these psychological talks, I will just stop them and talk about the actual chart. Telling yourself the story will make it. Actually, yeah, exactly. Losses are this. Either you win or either you learn. I know that's cliche and such a shit code, but that's true. Either you win or either you lose. Okay, guys, so that's enough about the 5-minute chart. Where was I? I actually lost the track. Where was I? I was building a narrative on the 5-minute chart, and yeah, the narrative has happened because the second scenario has played out. Okay, that's where we were. So the second scenario has played out perfectly, as you can see, and the 15-minute scenario has came live. So it was live because the 15-minute zone has been tapped. Okay, that's too fast forwarded. Let me just switch to the 1-minute chart and let's see the 1-minute markup actually. Where is it? 1 minute, 1 minute, 1 minute. Okay, right here. So as you can see, the 1-minute markup was exactly the same. I'm expecting a reaction on these deeper demand areas. While I'm making the markups, it's already happening. So as you can see, I was expecting a reaction on deeper demand areas and not on the first demand, which was the less recent 5-minute decisional demand zone. I was expecting a reaction on this deeper demand area or this deeper demand area. Two scenarios right here. First scenario is the same as the 5-minute. Come down, create a change of character inside of this zone, continuation to this supply zone. Second scenario, break of this demand zone, continuation to this demand zone down here. I would have taken a short if this demand zone is being broken, and I would have taken a short down to this demand zone. Second scenario, change of character right here, continuation up to the supply. I didn't show you a few other scenarios. Let me just show you right now. So the few other scenarios were if price comes down to this demand zone, and if price creates a change of character inside of this demand zone and taps this supply and creates a change of character right here on this supply zone, then this demand zone is invalid. Because if this demand zone couldn't push price to new heights, then this demand zone will be invalid because this won't be able to push price new heights because price was reacting on this supply zone and supply is in control. And if this demand couldn't take this supply out, then it will show that the demands are weak. It will show us that demands are weak, and we can't really expect a reaction on this demand zone too, because this demand zone was weak. This demand zone couldn't take this supply out, and supply is in control. So this supply has more chance to break this demand zone than this demand zone to break this supply zone. Can you see the logic behind this? That why is it important to actually track your zones too? Why is it actually important to track the zones? How strong is the zone? Who's in control? Which zone is in control? Because by the time that price touched this zone and created a change of character, a strong change of character right here, I knew that this demand zone will be broken. Because if this demand zone, if this decision demand zone couldn't take the supply out, it means that supply is in control, and supply will be highly in control because there's a repetitive pattern in price. What's the repetitive pattern right here? That price can't take the supplies out. Can't take the supply out, continuation to the downside. Can't take the supply out, cancellation to the downside. Can take the supply out, cancellation to the downside. So there's a repetitive pattern in every single price action. You just have to recognize this pattern. And if you recognize this pattern, you can actually trade based off that pattern. And as you can see, the same pattern played out right here. Zone, reaction, change of character, tap of the zone. This step couldn't take the high out. Change of character right here, cancellation to the downside. This demand zone will be weak. So yeah, these were the 1 minute expectations. Let me just go out for a cup of water. Sorry guys, but I'm really, really thirsty. Please, John, keep them a company.
Guys, do you enjoy this session? Is it helpful?
Yeah, man.
Is it helpful?
Yeah, man.
Yeah, it's
Yeah,
good.
Yeah, that's
Right.
fine.
Yeah, it's okay.
Yeah, it's great. But I have a question.
Yes?
I don't understand, as Marcel said, when our first demand zone react to the price, the second demand zone that is shown the one in our markup, it's not valid. But my question is that why it's not valid?
Which one? The first or the second, you mean?
The
Here I am.
second, the lowest demand zone. Can I show it in the, yeah, this. Why this demand zone is invalid?
I was just explaining it 1 minute before.
But I don't understand, I'm sorry.
That was invalid because the supply tap has happened here. And there's a pattern that price keeps respecting supply zones. As you can see, price keeps respecting supply zones and couldn't break the highs. High, 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 high respect. If price can take the supply out, which couldn't, as you can see, because this demand zone, this push couldn't take the supply out, and there was a reaction and strong change of character on several places. That means that this demand will be weak. But this is the first scenario. There could have been other scenarios too, when price touches this demand zone first without touching the supply. If price touches this demand zone first and creates a change of character on this demand zone, that would have been valid because the supply has been untouched. But after this demand is being touched, you can write the expectation order flow up to this supply. But if this supply takes over control, we can expect that price will continue the downside movement. The same goes on like the first scenario, where price touches this supply, in demand zone, creates a change of character on this demand zone, takes this supply, taps this supply, and if it can take this supply out, that means the supply is in control and the repetitive pattern goes on. And if there will be a change of character, then this demand zone will be weak. You just have to recognize the patterns.
Thank you, Marcel.
Understandable?
Yeah, it's great, thank you.
Marcel,
You're welcome. Yeah, last
Marcel,
question. So let me just continue.
can you just show me here in this region where was the change of character?
I will show you.
Because
I will show you.
Okay.
Let me just continue.
Let me how to erase.
Don't worry, I will just remove it. Okay,
Yeah.
you figure it out. Okay, so now we arrive to the actual case study building section, where we will build a case study on the 1 minute chart. Because I do this before every single case study building session. I mean, my own case study building session, that I take a look at the 5 minute chart, 15 minute chart, 4 hour chart. I take a look at the markups and I take a look at the actual price action that has happened, because that's part of the case study building. How do I say this? Progress. So yeah, it's part of the case study building progress. You have to take a look at your own markups or my markups. It doesn't really matter which markups you're taking a look at. Just take a look at the markups that you built before this session. And after you, please guys, just take notes and write it down. Can you just grab a piece of paper or something, your phone, anything, and write it down? Because it's really important. Just circle it if you did grab a piece of paper or phone or Word document or anything. And I will start it as soon as everyone is ready. Okay, I will say it. So just take a note, please. Before every single case study building session, take a look at my markups or your markups. and compare those markups to the actual happened price action movement. So the actual after session movement. And just compare those markups, those pre-session markups, to the after session markups. And if you recognize some mistake in your charting, in my charting, but mainly then just write those mistakes down and find those mistakes that why price did not do the expectational movement that you were expecting. But it's really, really important to take a look at the markups, the pre-session markups, before you start the case study building session. It is really, really important. And after you recognize the mistake that you made during the narrative that you built before the session, then you can find the reason, that what was the reason of that mistake. So as I said, for example, price tapped this zone and you were expecting a change of character right here, but breaks the zone, or expecting a character changing movement right here. There was a character changing movement, but breaks the zone after the character changing movement. Then you'll be able to find the mistake. You'll be able to find the mistake in your analysis, in your pre-session markup. But if you don't do this, that won't be a case study. That won't be a case study. That will be just a charting, a random charting, which is actually useless. A case study has to start with the markup, with taking a look at the markups. So it has to start with taking a look at the markups. Without taking a look at the markups, that won't be a case study. Could you write it down? Did you write it down, guys?
Yes, we did. Thank you.
Perfect. Okay, so this is the first step, by taking a look at the markups. Here comes the second step, which we will do on the 1 minute chart. The second step is to keep this exact same zones that you have kept on your chart. I mean, that you did on the pre-session analysis. So just keep the exact same zones that you, let me just switch to the 1 minute chart because there's a mistake in my zone. Yeah. So just keep the exact same zones that you've drawn on the pre-session analysis. After this, you can just mark the session beginning with, for example, a vertical line. Where's the vertical line? Here's the vertical line. You can just mark the session beginning with this line, and you can just mark the session ending with this line once again. For me, it's 5 p.m. right here. And you'll concentrate on this region right here. So this is the second step, to switch to the 1 minute chart. And write it down, please, once again, because I don't want to repeat myself after this session. I don't want to say what to do. I just want to say this once and for the final time. So second step is to switch to the 1 minute chart, keep or draw once again the zones that you've drawn in the pre-session analysis, and mark the session ending and beginning. And you'll only be focusing on this region that has happened inside of this session. That's the second step. So the third step is to take a look at the expectational movements. So these movements, or if you don't draw these expectational movements, just remember that what you were expecting at the beginning of the session. And please, guys, don't cheat. If you expected something, for example, the break of this zone, then use that and don't cheat and don't do something different. Don't say that you've expected something different when you're expecting the break of this zone. If you say that you've expected something different, you will be lying to yourself. You're lying to yourself and you're lying to your own analysis, and that isn't good. That won't be leading to anywhere. That will be destroying you, not building you. So just don't lie in trading. Don't lie to yourself, because lying to yourself is the biggest mistake you can make. So if you had a narrative that you're expecting a break of this zone and the break of that zone didn't happen, just don't change the narrative inside of the case study building. Because if you're lying to yourself, that will destroy you, as I said. Third step is to take a look at the expectational movements. Take a look at that what you were expecting. And if the exact same thing happened that you were expecting, then you're good to go. You can actually take a look at the, okay, right now, just you have two scenarios. The first scenario, second scenario. First scenario is that everything happened as you were expecting. That will be the first scenario. Second scenario, nothing has happened as you were expecting, and there will be two different lines inside of the first scenario. So everything happened as you're expecting, you can start actually marking your own trades up. So for example, like my trades right here, you can start marking your own trades or own trades up on trades. Second is that mark every single trade, but trade opportunity. Sorry, I can't speak. I'm thirsty. Let me just drink a bit. So the second is to mark every single trade opportunity that you can see and that is correct according to your plan. Only mark those trade opportunities inside of this case rebuilding session, which are good according to your actual plan that you're using inside of these sessions too. So don't mark false trades. Just mark the trades that fits in your plan. So the second right here is to mark all trades according to your plan that fits in your plan. So first scenario.
So could you explain that again? What do you mean mark all trades that fits your plan? What do you mean by that?
Inside of this time window, session time window, just take a look. I will actually explain this later, but okay, I will explain this later, okay? Or I will just do that now. Okay. So the on trades that's speaking for itself, just take a look at your own trades that you took and see if those trades were correct or not. So I took this trade right here. I found some mistake in this trade and I even journaled that mistake. The mistake was that there was liquidity right here and I didn't consider this liquidity. I actually didn't really see this liquidity when I was taking this trade. And that was my mistake at this trade. Even though the trade played out perfectly, there was a mistake in this trade, which I want to actually delete in the future. And I want to skip these trades where are liquidity, because this could be a really, really tragical loss in the future. So marking up your own trades and finding the mistakes in your trades. If there aren't any mistakes in your trades, then you're good to go. You've created a perfect session. You have nothing left to do. Second scenario, you're marking every single trade that fits in your plan. So for example, you skip the trade or you couldn't see a trade, but there was a trade, then you will mark it. We will talk about this when we are analyzing the price action at this region. But basically this means that if there was a supply trade that you didn't trade, for example, this supply trade right here, and you didn't trade this trade, you will analyze this trade and create a narrative around this trade and see if this would have been a good trade according to your plan. If this would have been a good trade according to your plan, just note it down and keep it in your journal. Because if you take a look at this trade, you notice that after creating case studies, after creating journals, you'll notice that I'm skipping these kind of scenarios, I'm skipping these kind of trades, and I want to be in these kind of trades, and I don't want to skip these kind of trades. And if you keep journaling these trades, you'll know that how to actually catch these trades. Okay, so the second scenario right here is that, what was it? Okay, the narrative that you've built before the session, so for example, like this, was completely wrong. So it was different that you were expecting. All you have to do is create a new narrative. So just create a new narrative by just simply looking at the chart. Just replay price before the session, replay it and create a new narrative. And actually take a look at what went wrong inside of your analysis and create a new narrative that fits your plan more accurately. So that's the second choice. And after you did this, you can create the same like here. So you can just mark all of the trades that would fit in your plan according to your plan. Was it understandable? Can I keep going?
Yeah, you can. That's good.
Yes.
Yes, everything clear.
Yes.
But you'll be able to rewatch this session too. So don't worry. So because my narrative was good, so I'm taking the first scenario because my narrative was good. I will take the second scenario inside of the first scenario that I will mark all trades that will fit in my plan. I will mark all trades that could fit in my plan. And I believe that's the best scenario that you could do, because as I sent you weeks ago, that trade that you didn't really understand inside of my case study, I recognize that trade, and you'll be able to recognize more trades. You'll be able to recognize more scenarios that weren't in your plan before. And if you recognize some kind of trades like this, or like that I've sent you weeks ago, then you'll be able to backtest those kind of trades more. You'll be able to take those trades in the future if it will fit in your plan. And you can always rebuild your plan. You can always create a new plan. You can always create a new point in your plan. But creating new points in your plan can only be achieved if you actually backtest and create case studies about the traits that you want to be in your plan. So without creating case studies and without creating backtesting sessions, you won't be able to add new points to your plan. You won't be able to add new kind of scenarios to your plan because you did not backtest those scenarios. So once again, I will just build a case study around the first scenario and mark all the trades that could fit in my plan. So as you can see, actually this part is not really interesting because the psychological talk around this topic is more interesting that I was talking about on how can you actually build a case study. This will be just an analysis. So prices step this demand zone right here. So that was the narrative. I was following my narrative and my narrative played out. So there was a character changing movement here to the upside, as you can see. Sorry, there was a character changing movement here to the upside, which we were expecting. Sorry, let me just mute everyone because you're speaking and it's annoying. So there was a character changing movement, which we were expecting right here according to the pre-session analysis, right? So the character changing movement has happened. What can we do in this scenario? We can hop in this trade because we were expecting this scenario and we can hop in this trade. There was a demand zone that has caused the character changing movement to the upside because as you can see, the inefficient push has started from this candle. There's inefficiency between this candle and this candle. There was a change of character. Okay, according to my plan, that was a perfect criteria because there was liquidity creation too right here. Prices swept some liquidity into this POI. As you can see, there was liquidity, swept this liquidity into this POI, created a change of character, created liquidity for this POI right here. So, but we are not really talking about this criteria. We are not really talking about criteria. We're just building a case study. This did fit in my plan. So I did take this trade. And first I was targeting the liquidity line right here on the upside. So if you're building a case study and if you're backtesting your own trades, just no, sorry, I did not open this right here. I did open the 50% of this candle. Yeah. So if you're creating a case study and you're backtesting your own trades, just mark the exact same TPs that you are taking and don't change your TPs. And you'll see that what went wrong inside of your TP. What was the mistake in your TP? Because if you keep the TPs that you were expecting, then you'll see that what price were reacting on, for example, like this, and why didn't it hit your TP? And after this, you'll be able to make a statistics out of these two. So everything is around statistics. You have to create statistics because that's the way to improve. I know it sounds scary that, oh my God, I'm not in middle school to create Excel files and statistics and shit, but you have to. In order to succeed, you have to create statistics of your own perspective, of your own performance. So I didn't mean to say perspective, I meant to say performance. So yeah, that was my original TP right here. It didn't hit TP because price was reacting on this supply zone right here. So that was my first mistake, that I determined my TP poorly. So that was a poor TP choice. And this could have been considered a counter trend trade too. So yeah, 1 to 5 TP would have been much better in this case. But I know my mistake, that I was targeting this liquidity line right here. I didn't care about this supply zone, even though I closed my trade in 1 to 5 after I saw this reaction right here. I closed this trade right here somewhere at this region. So in between 4.5 and between 5 risk reward ratio, I closed somewhere around here after I saw these huge reactional candles. So this was a reaction, this was a reaction, this was a reaction, this was a reaction, this was a reaction. So I closed it somewhere around here. I booked my profit. So yeah, that was my mistake in this trade, that I choose my target point poorly. But the trade was perfect according to my plan. I did take this regardless. Second trade was right here, as you can see. And of course, I'm just saying my thoughts right now that I usually write on the screen. So I usually write these thoughts on the screen in the case studies, as you usually see them. Anyways, continue. So the second trade, not scenario, sorry, I'm tired. So second trade was this one right here, that this candle, this demand zone right here started the inefficient push to the upside that has caused the break of structure right here to the upside, right? So that was a change of character. After this, there was a pullback, and from this demand zone, prices created a first break of structure to the upside. So that was a confirmation for the price will continue this movement to the upside, and that was the second confirmation for the longs, because this could have been a risk entry because there was only a single change of character, not a strong change of character. So this could have been a risk entry, but it did fit in my own plan. I don't know if it did fit in your plan. It did fit in my own plan, my personal plan. It did fit in. So I took this trade. But this break of structure was a confirmation that this trend will be continued up to this supply zone. Where did the first break of structure happen from? From this demand zone right here, right? Why did I use this wick instead of this candle? Why did I use this wick? I'm asking you guys.
Because the wick mitigated the other candle.
Mitigated.
Exactly. There are the resting orders on this wick. So yeah, that was the first inefficient push. There was a pullback. Price couldn't touch this zone, as you can see. Instead of touching this zone, it created liquidity right here. There was liquidity that was a buy trap for the new buyers that jumped into this trade after the break of structure here to the upside. If your zone doesn't have liquidity in the continuation scenarios, and this is a continuation scenario, that's what I was explaining in the continuation webinar. If your POI doesn't have liquidity, then your POI will be the liquidity. So in this scenario, the simple continuation to the upside has happened. This POI did not have liquidity. So this POI became the liquidity for the lower zone that has caused the original break of structure to the upside. And yeah, my mistake here was that I didn't consider this liquidity. I even opened this trade. I didn't really care about this liquidity. I did open this trade and it went perfectly fine. But that was a mistake in my trade. That was a mistake that I will journal, that I will write down in my journal. So I will pay more attention to liquidity in the future, liquidity scenarios like this in the future. So yeah, that was the first scenario. After this happened, after this continuation has happened, we could expect the tap of this supply zone. And this supply tap, this scenario that has been played out, was perfectly fine according to our plan on the 15-minute chart too, as you can see. This is the 15-minute chart, sorry. So it was perfectly fine according to our 15-minute and 5-minute plan too, because the exact same scenario was played out and it lined up. After this, all you had to do is wait for a confirmation right here at this zone, because the first scenario after the top of this zone was the change of character on this zone. Second scenario was the break of this zone. All we had to do is follow the scenarios that I'm drawn on the analysis right here, on the market analysis right here. First scenario played out because prices created a change of character here to the downside, strong change of character on several places. So we aimed for short opportunities. First, I did set an order limit on this first character changing supply zone up here, but it didn't mitigate. It has been left unmitigated. Sorry, I'm really tired. So it has been left unmitigated, and I looked for new opportunities. As soon as I saw the strong change of character right here that has happened from this candle, here was a strong change of character that has happened from this candle, as you can see, and there was some demand reaction right here at this region, as you can see, because price was reacting on something right here and flipped something. I was looking for a new opportunity, and I did set an order limit on this supply zone up here. Why did I set an order limit on this supply zone? Because there was liquidity for this zone. As you can see, there was perfect liquidity built up for this zone. And that's why I said if your zone doesn't have liquidity, then your zone will be liquidity. But this zone had liquidity, so this zone can't be liquidity because there's liquidity. This order has been missed by a few pivots, as you can see, so there was no tap. So we had to adapt. I deleted this order and deleted this order limit as soon as I saw the tap of this demand zone. But as I said at the beginning of the session, if this supply can give a reaction, and that was part of my narrative too, that's why I marked this on the 15-minute chart that price will create a downside movement and not that it will create a reaction on some demand zone right here. So according to my pre-session narrative, if price creates a change of character right here, then I will follow the movement to the downside and I will hop in short trades. That was the plan. And there was a mistake, not even a mistake, there was a miss by me. I didn't take a trade, which was right here. As you can see, huge inefficient push has started from this candle right here. And this candle has caused the tap of this zone. And even though I marked it and I said it, and I was expecting a break of this zone, I did not trade this trade. I did not take this trade because price was coming from unmitigated zone. And I was lack of patience, not patience. What am I finding? I was exhausted. I was tired and I didn't really consider my plan right here. So I did not trade this supply trade, even though I was expecting a break of this demand zone. Of course, price was coming from a mitigated zone right here. So according to my original trading plan, I couldn't even take this trade. But according to my narrative, pre-session narrative, I could have taken this trade. But I missed this trade, and that's perfectly fine. I just see that price has really followed my narrative because it was reacting on the supply zone. And even though there was a demand zone, this has become weak. And it just confirms that my narrative was good, even though I didn't take this trade, because I was expecting that this demand zone will be weak, and this demand zone has become weak by the break of this demand zone right here, as you can see. So my narrative is good. Okay, let's see what happened after this. I didn't even trade after this. I didn't even look at the charts after this movement has happened. So it's new to me that what has happened right here. There could have been a good entry opportunity once again, because as you can see, the zone break has happened from this candle up here, this wick up here. And this could have been a good entry opportunity right here. The price has created liquidity for this zone. I could have set an order limit on this zone too, because the zone break has happened from this candle. So price wasn't coming from unmitigated zone. It just broke below a zone. So this could have been a good liquidity sweeping scenario, even though this was the 15-minute zone. As I said in the webinar, in the continuation webinar, I recommend you to wait for a 15-minute zone tap, but personally, I usually take 1-minute continuations on the 15-minute zone break because I know how to actually take those continuations. And with liquidity, you can easily take those continuations. And as you can see, this could have been a good scenario, but price didn't feel like to mitigate this POI right here. So after this, price has followed the movement to the downside and broke the last recent break of structural point right here to the downside. And created this new fresh supply zone up here that is called the break of this demand zone. I mean, breakout structure right here, and created liquidity for this zone. So if your zone doesn't have liquidity, then it will be the liquidity. This zone had liquidity. So right here was perfect liquidity line, as you can see. This zone had perfect 4 equal taps right here. So this zone had liquidity. So this could have been a really, really good entry or opportunity right here. That has happened in session. So this was even in session. So let me just see if the 2-pip stop loss could have covered the whole zone. No, it didn't. So we would have used the 50% entry right here. And this would have been a no-tag trade for me, for us, for anyone who took this, because the 2-pip stop loss couldn't cover the whole zone. So session has ended after this movement has happened. So basically, we took every single trade opportunity. I mean, personally, I took every single trade opportunity that has fit in my plan inside of this session. So I took 2 trades in this session. First one was right here, second one was right here. And none of the other opportunities were fitting my plan. So I took the maximum out of this session because I took every single trade that fit in my plan, that did fit in my plan. So there was no other opportunity after a tap of this supply zone because price didn't feel like to mitigate supply zone. It would just keep continuing to the downside, or just didn't mitigate the 50% of this candle. So basically, I took the maximum out of this session. So I have no job to do left. But for example, if you miss some trades or your trades did hit stop loss or break even, you can just backtest those by the way I told you. So just backtest your mistakes, see what price was actually doing, what could have been your mistake. And yeah, basically that's it. That's how I usually build my case studies. And I believe there's nothing really more to explain about this. Have you guys got any more questions about this?
Hello.
Hello?
Hello. I've got a question in terms of, because I was looking at I'm a new student. I was looking through the course, and then I went through the supply and demand section, and I went through the market structure section, and actually the whole thing, but I'm still now taking notes. But as I was watching the recaps in the course, I see you don't mark out like market structure, because I was once like at vertex, and then like they were marking out like higher highs, higher lows. Here it seems like you guys use like supply and demand zones. So how does market structure actually fit into this way of trading?
Just keep watching the course and keep watching the webinars. It will be all explained.
Oh, okay.
You're basically at the second unit of the video course. Just watch all of the videos in the video course and watch all of the webinars. The
Yeah.
topics are being mentioned in the webinars. So every
Oh.
single Wednesday session has a topic, educational topic that we are going through. And basically those are being explained. So just keep
Oh.
learning, keep watching the videos, and you'll understand everything.
Oh, okay. All right, thank you.
That was far away, Bradley. That was far away from this liquidity. But that could have
Awesome.
been good. That could have been swept. Any questions, guys?
Yeah, one fast one, please.
Yeah.
Marcel, when you see the chalk, you know, when you have the chalk, you know, for example, sorry for that. Okay, you have the chalk. Okay, you want to look, you look here for a candle close or a wick to consider that the chalk happened after it would take down here. You need a candle close.
For this, a candle close, because this is a break of structure to the
Okay.
upside, and this low point
Okay.
right here can be only considered a low point if it breaks above this high with a body break. So this will be only a low point
Okay.
if it body breaks the high, because this has to be a break of structure. So the low point that is being taken out by the change of character, it has to be a low point that takes a high out with a body break.
Okay. Okay.
Right.
Thank you, man.
Perfect.
Thank you.
You're welcome. Guys,
Excuse me, mister. Excuse me.
yeah?
Why you don't enter here in flip in this area?
That was before the session. Session
Okay.
starts here. We only trade from this region up to this region. We only trade in this time window. We don't care about this.
I don't take this trade because I saw here liquidity also with here.
Yeah, I even mentioned that in this video, that was my mistake. I found that mistake, and that was my mistake in this trade.
Thank you.
You're welcome. So guys, I believe I covered everything that I usually do when I'm building my case studies. Basically, it's up to you on how you analyze the charts right here. I can't tell you how to analyze the charts. That's up to you. All you have to do is follow these steps, follow the scenarios that I've drawn here, follow the markups, follow everything. And after this, you can build a case study. But you have to do the hard job, which is the analyzing part right here. And you have to analyze the chart by yourself. And you have to do this every single time before you create a case study. Is it understandable? Everything was understandable.
Yes, yes.
Do you know how to build a
Yes,
case study
Mr.
right now?
Yes.
Yes, Marshall, we understand. Thank you.
Can you recall those scenarios that I've drawn on the chart? I mean, these scenarios, that first scenario, second scenario, on trades.
Marshall, one question
All
about
other
the time.
trades. Yeah.
If you allow, the one question about the time window, I see 3 hours marked on your chart between 2 p.m. I think it's Belgium time until 5 p.m. Is it 3 hours window? And is there any specific reason why you don't extend it further?
Have you read the PDF? Have you read the PDF yet?
Yeah. I have read it, but I mean, this is because of the limited time you want to give it to. But I mean, are we allowed to trade?
It is being explained in the PDF. This is where New York session opens. This is where London session closes. That's the time window where the volatility, where the volume is the highest. So the volume is the highest in this time window. You can trade actually 2 time windows. The first one is the London session. London opens at 9 a.m. right here. And you can trade this to 12 p.m. So that's the first 3-hour time window. That's the second 3-hour time window. These are the tradable sessions in every single day.
So volume.
This is what we call a kill zone. These time windows are the kill zones. And the volume is the highest in these kill zones.
Okay, thank you.
You're welcome.
One more question.
Yes?
Do we have to do the markups before the start of the session?
Of course, you have to do your own markups.
Yeah.
Of course, you do your markups.
Thank you. And then compare it and then see which one is, happened right and wrong.
Exactly. You always have to create your own markups and compare those markups to my markups. Okay, guys, that's the end of the session. Thank you guys for being here. Thank you guys for being part of this community. Thank you for making it awesome. And yeah, see you guys tomorrow. I will host a session tomorrow, I believe, or the day after tomorrow. I don't know what day it is. Anyways, I will announce it. And thank you guys for being here. Wish you guys a beautiful rest of your day or night. And see you guys tomorrow. Take care, guys.
Thank you. Thank you. Thank you so much.
Take care, guys.